What is going on, investors? Back again. Exciting day. Today we get to talk about Tesla, which reported Q3 earnings and deliveries right after the bell today. We'll jump into that. We'll jump into the numbers and the press release, and then finally we'll jump over the stock chart to see what's going on with Tesla. See if maybe it's pulled into a range where we could potentially buy shares. If you think Tesla is a great investment and they make great cars, hit that like button and maybe consider subscribing to the channel as well. So here we go, up about 1.6% after hours. This will bounce around a little bit. Who knows where this will end up by the end of the trade. We also have a conference call hitting at some point with Tesla here in the after hours, so that can make the stock bounce around. But Tesla did hit most of their targets in the third quarter. They kept their 500,000 delivery targets in play. A lot of that is based on the Model Y production in Shanghai, China. So China's a big key for them, reaching that 500,000 car deliveries heading into this year. Let's jump right into this numbers. So Tesla puts out this nice little earnings slide and things like that. And we're actually going to go through most of this, which is not typically something we do with most companies. So sit back and relax. We'll talk a lot about Tesla here. So we've got automotive revenues right here at the top, some regulatory credits. So if you don't know, Tesla actually kind of got a surplus of regulatory credits because they're one of the only EV makers selling cars in mass market. So they're collecting these from the government and then they sell these to other OEM manufacturers. And so that's how they earn some revenue. And it is not insignificant, especially when you take a look at the profit numbers. So from an automotive perspective, we're up big year over year, 42%, quarter over quarter, 47%. They had a big quarter in Q3. Q2, obviously affected by the virus and things like that, was kind of a flat or an inline quarter with what we saw. Q3 was an acceleration, went all the way up to 7.6 billion. So that's super nice. And we see an automotive gross margin here of 27%. Now that includes a little bit of these regulatory credits. I'll show you at the end of the slide what we can see is a blended multiple here, taking this out, and then we can see what they make simply on the cars that they make and manufacturers, not including these regulatory credits. So we'll get to that in a second. So total revenues came in at 8.7 billion. Guys, that is 39% year over year, 45% quarter over quarter. Guys, if they keep growing like this stock is criminally undervalued, believe it or not. So, but these numbers just keep going up and up. When are they going to stop? I don't know, but this is absolutely phenomenal numbers based on the environment that we're in. So we've got some operating expenses here. We've got our total gross profit. They don't break it out here all for you. I'll show you towards the end of this slide a little bit more detail on this, but we got to get to an operating income from operation here at 809 million. That is 210% higher year over year and 147% quarter over quarter. There's a reason why this stock is sky high. Okay. It's not because everybody just wants a Tesla or wants to drive one or has aspirations of driving one, and so they buy the stock because they can't afford the car. No, it's because they're growing operating income, they're growing top line, they're growing these numbers rapidly and really fast. So we've got an operating margin at 9.2%. Guys, that is basically over a double over what we've seen just in the last few quarters. So they're doing a really nice job here. So moving down, I don't really look at adjusted numbers, don't really care about that too much. We'll take a look at the rest of these numbers here in a minute. So operational summary. I like this because we see vehicle by vehicle, because Tesla has like they're only making cars and they deploy a little bit of solar. It's really important to dissect these numbers. So we got Model S and Model X production. These are their higher end cars. They typically sell for, I think, $70,000 or more, up into the $100,000 range when you get a fully loaded one, fully optioned one. We see here that they took a big dip in terms of production. Okay, now deliveries down here paint a little bit different story, but in terms of production, they really hit the brakes on this Model S and Model X production, but it ramped back up in Q3. So you see that's just a delay in production, I guess. And so we see quarter over quarter, we're up 169%. 69 is a favorite number of a lot of people, including Elon Musk. 4% year over year. So more in line with what we were expecting with Model S and Model X production. You tend to see that with these higher end cars, it obviously is only appealing to a certain type of buyer and a certain type of financial wealth. And so I would expect these numbers to be more in line with this, because there's, millionaires aren't being minted, or 100,000 heirs aren't being minted, which is typically what you need to be able to afford one of these cars, at least straight off the lot. Now, Model 3, Model Y are more the affordable cars, and we see consistent ramp up at this. We did see a delay or kind of a stall here in Q2, but boom, all the way up to 128,000 in Q3 in terms of production. That's 69% quarter over quarter, 60% year over year. That's super nice. We see for a total production at 145,000, that's 76% quarter over quarter, 51% year over year. Guys, if they keep growing like this, I tell you what, these shares are probably undervalued even at today's prices. Deliveries paint a similar story, okay? We have deliveries here. Notice that they differ a little bit from production, but it's a pretty tight spread, okay? And you kind of like to see that. You wouldn't like to see that Tesla's making all these cars and nobody's buying them or nobody's taking delivery of them. This is a really tight spread, and it looks really nice to me. We see that we're growing year over year for the most part, except in the Model S and Model X. Again, that's the high-end car. Wouldn't expect this to continue this fast ramp up. And those are also the more legacy cars, I guess you could say, in their fleet. These Model 3 and the Model Y are newer and obviously cheaper as well. And we're seeing consistent growth year over year and quarter over quarter on that. So all of this is looking nice. The solar business is deploying more watts, is storing more. It all looks good. It's a very small part of their business. I think it does tie in a little bit, but it is a smaller part of their business. We do see the supercharger stations ticking up a little bit. I was driving around in a Tesla this last weekend, and man, it is a little bit different. Okay, I'm used to a traditional gasoline car, and we were in a part of the state of California where there wasn't a lot of chargers, wasn't a lot of superstation, and we were kind of worried if we were going to run out of batteries. So it is a little bit different. You would like to see this continue. You see 33% year over year. I think depending on what happens in the election, something like this could be accelerated, and we'll see what happens. I don't want to get into any kind of political talk at the moment. So vehicle capacity, this is interesting. You see here, they're showing you how much they can produce in terms of these factories. And then we're going to come online with Berlin here very soon, Texas as well, and the United States. This must be some other place where they're going to make the Semi and the Roadster as well. They might not do it in Fremont, or I wouldn't open up a business in California, to be frank with you. But Texas is going to make the Cybertruck and the Model Y, and we've got the rest of this coming on the line here very soon. So we'll see what happens here. And then look, Model Y hasn't even really produced in Shanghai yet, and that is a key to their business. So got some stuff here. What's interesting is on the battery day, most of you guys probably know this already, but that over the next few years, they should be able to reduce their kilowatt price on their batteries by 56%, which will enable production of a profitable $25,000 vehicle. Okay, $25,000 vehicle. I don't want to say that's cheap, but certainly more people will be able to afford that. So there's energy business. Here they are with their solar roof. I've seen some reviews on this on YouTube. I actually am getting solar put on my house here. I think it's next week. Actually, I have a brand new roof, so I don't need another new roof. And I didn't happen to go with Tesla, but I did research their product. They have a very competitive product from a price perspective. They're at $1.49 per watt, and it's a very, very competitive product. I just happened to go with somebody else, but it is it's a nice product to have. I don't necessarily know if it'll be a big revenue driver here in the future. Now, they do some battery day highlights. Again, they're showing you like the range. So not only are they going to reduce the cost here, but they're also going to increase the efficiencies of these products, which will make their vehicles even more. They're already kind of leading the market, but you get range increases and they get cheaper. They're just going to dominate the market, in my opinion, even more than they already are if they are able to achieve this. We'll see if they're able to achieve this, but they are going to see some price reduction and things like that. Now, some eye candy here. We've got the Gigafactory in Shanghai. Boy, that's really big. We've got the inside the Gigafactory in Shanghai as well. well. We've got more Gigafactory here. We've got, it looks like maybe a paint booth there. And then we've got the Gigafactory in Berlin. Take a look at that. That looks really nice. Look at all those trees out there. That looks beautiful. Anyways, Gigafactory in Texas. That is obviously just breaking ground. They've got this mega pack product. This is interesting. If you got time, do some Google and YouTube rabbit holes and stuff on this. This is an interesting business, especially out here in California. Could become a big part of their business. Now, some interesting metrics here we see. I talked about how they had these vehicle deliveries. Look at that. We skyrocketed in this quarter. Okay, we've had some good quarters, but this was a great quarter. And so we have operating cash flow and free cash flow. Again, when you deliver that many vehicles, you expect this type. And then net income, again, really nice. One of their best quarters, possibly their best quarter of all time. So that's super nice to see as well. We've got vehicle deliveries quarter over quarter here, just a steady rise. We had a little bit of a hiccup in Q2, but we're resuming back up to the upside there. That's really nice as well. Now, moving down to the last financial statements here, we've got total revenues here at 8.7 billion. I've gone over these in the first half of the slides. These just give you a little bit more granular detail. Like you come down here to operating expenses, you see the R&D, the selling, general administrative, and the restructuring and other. So you get an idea on what they're spending this money on. Considering how good and how much accelerated the revenues went in the quarter, this is actually really tightly controlled expenses. So I really like what I see from that perspective. Now, last thing I want to show you here is they do have a little bit of debt down here on the balance sheet, but we have increased our cash balance, and Tesla noted in the press release that they have enough cash to be good for the foreseeable future. So that is really good as well. So love to see that. We've got the cash flow statements, but what I wanted to show you just really quick before we jump over to the stock chart and take a look at some stuff here. Right here, I want to show you these. We've got the automotive gross margin gap here, and then we've got less the regulatory credits. So this is their combined margin here in the latest quarter is 27.7%. We see that compares very favorably and even higher than the previous period. But we have a regulatory contributes this percentage to the gross margins. And so if you want to say, okay, eventually these regulatory credits are going to go away. Tesla's going to run out of them. They're not going to be able to sell them anymore. They're going to have to stand on their own 2 feet and only rely on income from selling cars that they actually manufacture, not selling regulatory credits that they've acquired over the years. We'll take a look. It's still really nice. Look, we had a great quarter, 23.7% automotive gross margin. That compares way over the previous quarter where we were at 18. We actually dipped below 20 for the first time, but consistently they were at that 20, almost 20 and a point. But, look, now we're up at 23%. Now, they've dropped the price, I think, on some of their cars, more famously recently, $69,420 on an entry-level Model S. And so maybe this goes down a little bit, but they're squeezing better production and better technology out of the batteries, and then those tend to be cheaper over the next few years. I think a blended multiple in this 20% range is probably expected. And there we go. That's the end of those slides. Now, finally, let's jump over to the stock chart here. If you watch my Friday videos where I talk about Tesla, you've probably seen this chart many times before. We've kind of been analyzing the stock. Made a nice run here. This up to the highs. This was like split announcement somewhere in here. Stock ran to the highs. We have not come back to the highs. And so that's a little bit technically a problem. We're actually stuck inside a box here where we are not moving out of this box right here where Tesla is. And we are between, I would say the upper end of the range is 455. Bottom of the range tends to actually be this 50-day moving average. You see this light blue line is the 50-day moving average. Notice when the stock has pulled back pretty hard, it's actually touched perfectly on the 50-day moving average. Here we wicked through it, but then we ended right on it. We're actually dangerously close here. So if you want to buy, if you're bullish Tesla and you want to buy shares, personally, you're in a range here. Do you need to wait till it pulls all the way back to this 50-day moving average? If you want to set that rule yourself, that's fine. Right now it's at at 414, call it 415. Okay. As the days go on, this line is still in a positive direction. So it will start to keep trending up and it'll get closer to where we're at, which is right around the 433, 434 mark with Tesla in the after hours trade. But you are right in a zone. If you believe that this 50-day moving average will hold, Tesla will hold this 50-day moving average and bounce up, then this is not a bad part to buy. But what I want to make you aware of is this overhead resistance right at 451, 452. You could even push it up to 455, 457. Notice that once this stock broke that level, it is tried many times. 1, 2, 3, 4, 5, 6. It got it here 7, but then broke 8, 9. I mean, we've hit against this like 10 times, and this is a daily view. That's like not that many days. And so this is a firm, I repeat, firm line in the sand with Tesla. Now, what happens is when these stocks get squeezed like this, eventually they want to resolve either up or down. We're seeing a compression of buyers and sellers. Notice how much, especially over the last, call it 10 days or, maybe last month or so, the compression of Tesla has really started to squeeze here. Okay. We had much wider swings back in here. Now the stock is compressing. I would expect this stock to either bust back up here to these highs at some point over 5, or this stock to break down through this 50-day moving average and move lower down to maybe the 380, 390, maybe taking a pit stop at 400 as well. That obviously, for my opinion, would be a really, really compelling stock place to buy the stock. I think maybe the best place to buy the stock is actually down in this range where it used to be resistance here. And that's down at 341. Again, that is up almost $100 lower than we are today. A lot of people will say there's no way that will happen. But guys, this stock is extraordinarily volatile and it certainly could make its way back down here. This would be an interesting buy point in my opinion. So Tesla, not a bad quarter at all. We see up now about 2.5% in the after hours. It should jump around. We'll see what happens going into the trade tomorrow. This stock, you never know what's going to happen, but we are actually in a really, really tight range here technically with the stock. So we'll see what happens going forward. That was Tesla. Hit that like button if you enjoyed what you're seeing here on the program, and that subscribe button as well. Want to thank all you guys for watching. We'll be back again soon. Good luck with your investments.